There was a bit of a bright side to markets on Friday with grains rising. AgDay's Michelle Rook is back with a preview of this week in markets now.
Friday's market closes were higher in the grains, lower in the livestock. DuWayne Bosse with Bolt Marketing is back with analysis. So the pop that we saw in the grains on Friday, how much of that was just some covering and short profit taking?
I think a lot of it was, it was a really rough week last week in the grains. The weather really flipped on us. The week prior to that, we had maybe a hot, dry forecast coming in. I really thought we'd get a nice bump in the market. And instead, last week came in and the weather flipped again. And now we're looking at cooler temps, above average rainfall. And we basically took all the weather premium out. So when we got to Friday, it was a new month, sure. But I think it was just a short covering pop is all.
So as we start a new week, DuWayne, it is going to be pretty hard to build on that then.
I'm afraid it is. I think the trade, I think everyone's comfortable with saying yields are trend line to above. There's no disasters out there. Even my area is kind of patched in a little bit better. Crops look better. So I think it's going to be really hard to get a market to rally. I mean, you would need some sort of surprise, China come in and buy a massive amount, but I just don't look for that to happen because they're smart. There's a downward trend here. I think they can just sit back and wait and buy things even cheaper.
Conversely, we had livestock down on Friday, and that was kind of due to this meltdown in the stock market, wasn't it?
Yeah, there too. What a horrible week on the equities. It started with a lot of, the private business companies coming out with some negative reports and jobs report, unemployment, and all those were negative, and all those kind of snowballed into all of a sudden come Friday. We were talking about being in a recession and 3 interest rate cuts yet this year, and that really hammered the equity markets, which of course made it really easy for the funds to say, well, I don't want to be long cattle if we're going into some sort of a recession or even a pull down in the economy. And remember, we're at record high prices. I mean, not record high price area for cattle, so it's pretty easy to take profits up there.
Do you think the funds will liquidate more, though? I mean, technically, October live cattle did at least close back above the 100-day moving average.
Well, the live cattle are a little bit odd and different because there's at such a discount to the cash market. But when I look at feeders, I think the highs are in, and I think cow-calf guys need to be aggressive hedgers here because they're at the cash market and could go a lot lower, really.
Thanks for your analysis. DuWayne Bosse with Bolt Marketing. We'll have more Ag Day coming up.